Imagine waking up one morning to discover that every single bank in your country has completely frozen all accounts. Your national currency has become utterly worthless paper, and total financial panic is now sweeping violently through every single global market. To powerful assets, physical gold and digital Bitcoin are right now locked in one of the most intense and consequential financial battles ever fought over who truly and genuinely deserves the title of the ultimate economic collapse survivor. If you have ever wondered which of these two truly extraordinary assets would genuinely and reliably protect your hard-earned wealth when civilization's entire financial backbone suddenly and completely breaks apart forever, you are absolutely in exactly the right place today. Stay with us all the way until the very end of this important story, because everything you are about to discover could permanently and completely change how you think about money, financial survival, and the future of global wealth preservation. If you find this story genuinely valuable and want to keep receiving critical financial insights that could protect everything you have worked your entire life so very hard to build, please subscribe to our channel right now without any delay. Gold has been the world's undisputed champion of wealth preservation for over 5,000 remarkable years, successfully surviving every fallen empire, every devastating world war, every catastrophic currency collapse, and every single major economic disaster that humanity has ever produced. When the Weimar Republic's catastrophic hyperinflation completely destroyed the German mark in the 1920s, one single ounce of gold costing just 170 marks in 1919 exploded to an incomprehensible 87 trillion marks by 1923, when Zimbabwe's national currency became so utterly worthless that desperate citizens needed wheelbarrows completely overflowing with cash just to purchase one single loaf of bread. Gold immediately stepped in as the only universally accepted and trusted exchange medium available anywhere. When Venezuela's devastating hyperinflation officially exceeded 10 million% annually, the fortunate citizens who had wisely chosen to hold physical gold successfully preserved every single bit of their purchasing power while all their paper wealth completely and totally evaporated overnight. Hungary's 1946 hyperinflation, officially the single worst ever recorded in all of human history, made their national currency completely and utterly worthless overnight. Yet gold maintained its full purchasing power and provided reliable, universal, accepted wealth storage. These sobering historical examples are not theoretical scenarios pulled from dry economics textbooks. They are real, deeply lived, and profoundly human experiences that conclusively prove gold's extraordinary resilience whenever every single other available financial instrument has completely and utterly failed. Bitcoin was officially born in January 2009, brilliantly created by the mysterious and still unidentified figure known only as Satoshi Nakamoto, as his direct and powerful personal response to the devastating 2008 global financial crisis. In its relatively brief 16-year existence, Bitcoin has completely exploded from being worth mere fractions of 1 penny to trading well above $100,000 per coin, delivering extraordinary returns that no other asset class has ever truly matched. Bitcoin's entire total supply is permanently and mathematically capped at exactly 21 million coins, a completely immovable and permanent hard limit encoded into its core software that cannot be changed without instantly and completely destroying the entire network's fundamental credibility. In April 2024, Bitcoin officially surpassed gold itself to claim the highest stock-to-flow ratio among all liquid and easily tradable assets anywhere in the entire world, technically and measurably making it even decisively scarcer than the precious yellow metal. Unlike gold, whose global supply could theoretically be expanded through future deep ocean or asteroid mining, Bitcoin's absolute digital scarcity is truly and permanently mathematical and completely immune to any conceivable future technological or strong economic pressure of any kind. This powerful digital scarcity argument has firmly become the central intellectual backbone of Bitcoin's entire compelling Case as a genuinely superior and thoroughly modern store of value, perfectly designed for our increasingly digital and rapidly evolving technology-driven global financial era. The extraordinary performance numbers across recent years have been nothing short of completely breathtaking for dedicated Bitcoin believers, and deeply instructive for serious and thoughtful investors carefully studying long-term wealth preservation strategies across all available major global asset classes today. In 2024 alone, Bitcoin surged by an astonishing 135%, while gold simultaneously delivered a highly impressive 35% gain, with both remarkable assets hitting simultaneous record highs that very few mainstream financial analysts had predicted. Bitcoin dramatically crossed the landmark $100,000 price barrier in late 2025, briefly and spectacularly touching $126,000 in October, before a sharp and highly significant market correction decisively pulled it back down. Meanwhile, gold was confidently trading near $4,000 per ounce by late 2025, having climbed relentlessly from approximately $1,950 per ounce in early 2021 during its powerful, sustained multi-year bull run. Looking back across 5 full years of comprehensive market data, Bitcoin's extraordinary price surged over 1,060%, while gold's respectable 5-year gain came in at a comparatively very modest 71% across that exact same identical period. Yet past performance numbers recorded during comfortable bull market conditions only ever tell half the true and complete survival story. The other half gets written during terrifying moments of maximum fear and genuine systemic breakdown when urgent protection matters most. The pivotal year 2025 delivered one of the most genuinely revealing stress tests in the entire history of both these major and acute, widely followed assets, brutally exposing fundamental differences in how each one actually behaves when real economic fear arrives. Gold surged by an extraordinary and truly record-breaking 70% across all of 2025, consistently touching stunning new all-time highs above $4,500 per ounce as geopolitical tensions and serious trade war fears intensified dramatically worldwide. Bitcoin, by sharp and startling contrast, actually dropped approximately 7% during that exact same 12-month period, falling well below the $100,000 support level that many prominent and highly respected financial analysts had publicly declared completely unbreakable. This dramatic and highly significant divergence, now widely called the Great Divergence of 2025 by financial analysts globally, forced a massive, deeply uncomfortable, and completely necessary revaluation of Bitcoin's actual real-world status as a genuine safe haven asset. The closely watched Bitcoin-to-gold ratio fell sharply to a deeply concerning 3-year low during 2025, powerfully signaling that the existing important correlation between these two famous assets did not merely weaken that year, but fundamentally and completely broke apart structurally. Central banks all around the world have been continuously delivering an unmistakably clear and definitive verdict through their own actual purchasing behavior. And that overwhelming and consistent verdict is firmly and squarely in gold's favor by every single measurable metric. Global gold demand officially surpassed 5,000 tons for the very first time in all of recorded human history during 2025, generating an absolutely unprecedented $555 billion in total value across all worldwide demand categories. Central bank gold purchases alone reached 863 tons during 2025, as major institutions from China, India, Turkey, Poland, and Russia all systematically and urgently moved their enormous national reserves away from US dollar assets toward gold. Gold's rapidly growing share of global central bank reserves officially surpassed US Treasuries for the very first time since 1996. With 76% of senior central bank officials fully confirming they expect gold's total reserve share to grow further. This extraordinary and unprecedented institutional behavior pattern reveals something profoundly and urgently important. The world's most sophisticated and best-resourced financial institutions are actively voting with hundreds of billions of real dollars, and they are overwhelmingly and consistently choosing physical gold. The fundamental reason why central banks are racing so urgently to accumulate gold relates directly back to 2022, when Western governments completely and suddenly froze over $300 billion of Russian foreign currency reserves without any advance warning. That single unprecedented geopolitical financial decision sent an absolutely crystal clear and deeply unsettling signal to every single nation on Earth that dollar-denominated assets held in foreign banks are never truly beyond the dangerous reach of powerful political interference and control. Countries that had previously been entirely comfortable holding their national savings primarily in U.S. Treasuries immediately began urgently diversifying into physical gold, which uniquely carries absolutely zero counterparty risk and simply cannot be frozen or seized by any government decision. Bitcoin faces a completely different, and in many critical ways, far more existential set of technological and regulatory risks that physical gold has simply never needed to seriously contend with throughout its entire remarkable 5,000-year history of reliable wealth storage. The alarming threat of quantum computing represents a potentially devastating existential technical risk for Bitcoin that gold will never face, as sufficiently advanced quantum processors could theoretically break the cryptographic security foundations protecting every single Bitcoin transaction made globally today. Professor Campbell Harvey of Duke University, in his comprehensive and widely cited September 2025 research paper carefully examining safe haven properties of major assets, explicitly concluded that Bitcoin is very unlikely to successfully replace gold as the preferred institutional safe haven choice. Bitcoin's compelling investment case is not without genuine and meaningful merit, particularly for forward-thinking investors who are carefully planning strategically across the next full decade. Rather than simply preparing defensively for the next immediate short-term financial crisis that may arrive. BlackRock, VanEck, and Fidelity have all dramatically and significantly increased their cryptocurrency market exposure in recent years, and the landmark approval of spot Bitcoin ETFs in the United States in January 2024 was a defining and historic watershed moment. The U.S. government itself officially unveiled preliminary plans for an unprecedented strategic national cryptocurrency reserve during 2025, firmly cementing Bitcoin's growing and undeniable position within the official financial infrastructure of the world's very largest and most powerful national economy. However, when genuine serious market stress arrived during the difficult fourth quarter of 2025, Bitcoin ETFs experienced nearly $4 billion in significant investor outflows in November alone, painfully revealing exactly where institutional confidence truly goes during real crisis. Gold ETFs simultaneously recorded their absolute highest net inflows since the frightening 2020 pandemic crisis, powerfully demonstrating exactly where the world's most sophisticated and experienced institutional decisively turn when authentic and serious financial fear becomes real. Gold's enormous total market capitalization stands at approximately $20 trillion, compared to Bitcoin's comparatively modest $1.5 trillion market cap, making gold approximately 13 times larger and dramatically and consistently more liquid across virtually every single conceivable market condition. In a genuine economic collapse scenario, the critical importance of larger and deeply liquid markets cannot be overstated, as they absorb truly massive selling pressure without catastrophic price dislocations that would render all smaller and less liquid assets completely useless. Gold simultaneously serves multiple important and genuinely distinct economic functions, with jewelry, manufacturing, and industrial electronics alone accounting for well over half of total global annual demand, permanently giving gold an essential real-world utility base that fully supports its price. Bitcoin's global demand remains almost entirely concentrated in pure investment speculation and institutional portfolio positioning. making its price far more vulnerable to sudden, dangerous shifts in overall market sentiment than any asset backed by genuine, irreplaceable, real-world, everyday industrial utility. This critical structural difference in underlying demand composition is perhaps the single most important factor consistently separating gold's reliable, proven crisis period performance from Bitcoin's notoriously unpredictable and volatile behavior during every period of genuine acute financial stress and widespread fear. The most financially sophisticated investors of 2025 are increasingly recognizing that forcing an artificial either-or choice between gold and Bitcoin is actually the fundamentally wrong intellectual framework for approaching modern wealth preservation in today's deeply uncertain and volatile environment. Leading financial experts across major institutions from Goldman Sachs to respected independent research firms are consistently recommending that serious investors deliberately hold both assets, gold for proven defensive stability and Bitcoin for its truly extraordinary asymmetric long-term upside potential. Gold surged an impressive 70% in 2025, while Bitcoin fell 7% that same challenging year. Yet Bitcoin had previously surged over 1,000% in the preceding 5 years, while gold delivered just a modest 71%. A widely echoed 2025 recommendation from multiple highly respected research institutions advised strategically holding gold as your core defensive capital preservation foundation, while allocating a carefully measured and disciplined portfolio portion specifically toward Bitcoin's proven and extraordinary long-term growth potential. The world is rapidly becoming more digital. Central banks are accumulating gold at record rates. Institutional Bitcoin adoption is accelerating powerfully, and governments everywhere are drowning in historically unprecedented debt levels that could soon force a complete global monetary reset. The investors who deeply understand both assets own them with genuine deliberateness and strong conviction, and hold them patiently through all volatility are most likely to emerge from whatever economic storm comes next with their wealth truly and completely transformed. Now we genuinely want to hear directly from you, our valued and loyal community. In the event of a true total economic collapse, which of these two remarkable assets do you personally believe would best protect your hard-earned wealth today? Would you choose gold with its extraordinary 5,000-year historical track record, unmatched institutional backing, and conclusively proven crisis performance? Or would you instead trust Bitcoin with its revolutionary digital scarcity and complete censorship resistance against all forms of government interference? Do you truly and honestly believe the famous Great Divergence of 2025 has permanently and irreparably damaged Bitcoin's entire case as legitimate digital gold? Or is this simply a temporary setback before Bitcoin's next explosive historic bull cycle begins? Drop your completely honest answer in the comments section below. Because your unique perspective genuinely matters deeply to our entire loyal community, and this critically important financial conversation is truly one of the greatest financial discussions of our entire generation. If this thoroughly researched story gave you genuinely valuable new insights and made you think more seriously and carefully about protecting your hard-earned wealth in these turbulent and deeply unpredictable economic times, please subscribe to our channel right now, today. Hit that notification bell immediately so you never accidentally miss another critically important and deeply researched financial story like this one. Because your long-term financial future is simply far too important and far too precious to leave entirely to chance.